Let's be honest with ourselves. When was the last time you invested? How long have you been thinking about investing? In fact, let's start from there. A year, 2 years, 3 years, 6 years ago, 5 years ago. How long? What has been stopping you from not investing? So a lot of people, when you ask a lot of people what exactly is the reason why they're not investing, it's mostly the same answer, the most common answer. I don't have enough to invest. How much is my salary? Why would I invest and all of that? But you want to grow in wealth. You don't want to be where you are right now in the next 3 years, 5 years, and even in the next 10 years. But the shocking thing is, 95 can never get you there. It will never get you there. 95 is just to keep you stable and afloat for a very long period of time until you retire. But before I get into the details of this video, as an average Nigerian youth, you have parents that must have done civil service, spent 35 years in service, they get to retire, collect their gratuity. Can you remember how much is your dad or was your dad's gratuity or your mom's gratuity upon retirement? 5 million? 7 million? 2 million in fact? After 35 years in service. They don't know how to do business. They don't know anything other than working 9 to 5 for the last 35 years. How did that money go? What was it spent on? Can you recall? Now, do you want your life to be the same? Do you want to also get a good job, work 30, 35 years at your age, maybe in your mid-20s, late 20s? By the time you're 55, 60, you've retired and then you get your own gratuity. Maybe yours will be up to 10 million, 15 million, 20 million. Is that the life you want for yourself? So, if that's not the life you want for yourself, this video is for you. This video, we're going to be dissecting everything about investing, all of the options that are there for you to explore in terms of investment as a Nigerian, how little you can start investing, the misconceptions that are there about investments, and everything in between. This video will break all of that down. So if you're new here, my name is Nas, this is Nas Finance, and I break down personal finance and businesses in a more practical way for you to get on it as easy as possible. Let's get into it. So, let's discuss some of those misconceptions that exist that is holding you back from commencing your investment journey and why most people never even start investing at all. There are three major misconceptions and myths that exist about investment and holding people back from starting their investment journey. Number one is that you think you need a lot of money to start investing. That information is far from the truth. You don't need as much to start investing. You just need to start investing. For a lot of platforms, particularly in Nigeria and Africa and all, and even worldwide, a lot of platforms makes it easy for anybody to start investing with as low as $1, $10. More money gives you more return depending on your risk appetite, but you can start as low as 1,000, 10,000 to start investing. So that misconception should be taken away before we even move on to the next section of the video. You do not need a lot of money to start. The second of which is that investing is too risky that you will lose a lot of your money. While that is true to a certain level, not investing is worse. So you might be scared of commencing your investment journey because you feel like you're going to lose a lot of money and you don't know much about investment. But not investing at all, it's worse because you would definitely lose your money but in a slower pace. One of the major factors of that is inflation. Inflation eats up your money right in your face, in your bank account, and you will think that you have enough money in your account, but the value is just going down daily. So investing and not investing have risk. It's just that one has more risk than the other. The third misconception and myth that exists is that you need to understand the stock market to begin investments. You don't. A lot of people that even try to understand the stock market end up underperforming beyond the market value. So you don't need to understand the market. You just need to learn as you go and make sure you make smart investments. Not individual stocks, not individual company, but the smart index funds and ETFs that keeps you afloat until you get to a point where you understand the market properly, where you understand how to dissect companies before you can now start making those major investments. So all of this idea of, you have to study Bloomberg, know which instrument to buy and which not to buy, You would need it for learning purposes and as you grow in your investment journey. But at the beginning, yeah, you can really start without it, right? You don't need to analyze and break down all of the individual companies that you want to invest in. You just need as little information to start, and then you can learn as you grow. Now that you know these misconceptions and you know what they mean and you understand the basics of investing, the next part of this video takes us into what investing really is. But what is investing? First of all, investing, simply put, is just putting some portion of your money away so that it works for you while you sleep or while you do something else. I gave you a scenario of working 9 to 5 for 20, 30 years, 35 years, and then you retire and there's nothing to fall back on. The difference between you and the rich and wealthy people is investing. Not savings, investing. And so when you think about it as an investment into your future, where you set aside a certain amount of money with the expectation that it grows over time, that is what investing is. The key word here is time. Now, there are things that your investment needs to beat in order to grow your wealth and the value of your money over time, particularly in a space like Nigeria. Number one of which is inflation. Inflation is a major thing. Right now, as a country, Nigeria is running a rat race, a marathon race with inflation, and Nigeria is winning because our inflation is averaging around 18 to 30% actually, which means that if your money is in your active savings account, your standard savings account, returning at least an average of 3 to 5% per annum, inflation is just eating up your money. The 1 million in your account is not really 1 million in real value. It may just be 800,000 in real value. So inflation is one of those things that your investment will have to beat over time to grow your wealth. The other thing is tax, which, to be honest, most times our tax are very favorable to investment in the country. And the third thing is your own impatience. So the urge to spend that money, to do something with it, after all you have it, it's in your account, you just want to be part of this social gathering, you just want to buy that particular car that you may not need. It helps you hedge against your own inflation, your own impatience. Now, while we understand all of this, there are different options of investment that you can start with as low as 50,000 naira that would go a long way for you over time and make you very, very wealthy. I'm going to go through all of these investment options, all of which have different risk appetites, time sensitivity, the minimum entry points that you can use to commence that such investment, and we're going to give them a full breakdown. And of course, how you're going to allocate your 50,000 naira across all of these investment options. The first investment option is money market mutual funds. Money market mutual funds or money market funds is a type of investment that requires pulling resources, money, funds from different investors, individual investors, corporate investors, pulling it in together and investing it into short-term risk on financial instruments. Short-term risk financial instruments include treasury bills, commercial papers, government bonds, and all of those short risk investments that they can put your money into over a certain period of time with a certain rate of return. Now, why is this good for beginners? For beginners, when you're just starting off in investment, this is one of the best options that you can go for because, for one, it helps protect your capital, so it has low risk. It's relatively very, very low, almost little to nothing risk on your investment. So it protects your capital. It is flexible, which means you can remove your money within the next 48 to 72 hours. And most of the time, particularly for the Nigerian market, the returns are quite strong, such that you can get an average of 18 to 20% to 25% sometimes in recent times. The minimum entry level for money market funds, really, like I said, is like 1,000 naira for some platforms, 5,000 naira, 10,000 naira, whatever you're comfortable starting with, whatever you can give in consistently, effortlessly. You can engage in money market funds from different platforms. So there's the Cowrie Rise, there's the ARM platforms, there's the Stanbic IBTC, there's the ICO, there's the Bamboo. All of them have options for money market. The second option is index funds and ETFs. Index funds are a type of investment or financial instruments that pulls in resources and replicates the performance of the top best performing companies in the market. ETFs, which is the exchange traded funds, is also a type of index fund. that also pools resources and invests into the stock market as a single share. So you are not scared of losing money if one company fails. So the index fund has returned over the last 30 years. The S&P 500 has returned over the last 30 years an average of 10% annually for its investors, which is good. It's on the safer side. If you want to be conservative, that's a very, very good way to start. So Warren Buffett has advised a lot of beginners that you can start from here. The amount is really not what matters at the beginning, but the consistency is what matters. You building yourself over time and building your wealth portfolio over time is what is really key here. Again, you can access index funds options in Nigeria through ARMs, Trove, Bamboo, Chaka, and the Stanbic IBTC ETF. Right. This is not a paid advert, by the way. We have the third option. The Nigerian stock exchange market is the primary stock market for Nigerian publicly traded companies. It is where you go to buy shares, buy ownerships in different companies and all within the Nigerian market. So major companies like Dangote, Boa Cement, Zenith Bank, FC, GMB, and all of those are all traded in the Nigerian stock exchange market. Now, the Nigerian stock exchange market has very strong yield on investment, return on investment that attracts a lot of investors into the Nigerian stock exchange market. And I think you should also be part of it. Dividend yield for some of the Nigerian banks and some of the consumer goods companies has been averaging around 4 to 10% annually. That is the dividend they pay on each of the investment of each of the shares you own in their company. So if you own 1 million shares, they pay an average of 4% to 10% on your 1 million shares per annum. I would not advise anybody as a beginner to go into individual stock picking and investing in individual company at your start. It's not advisable. I would advise that you stick with the ETFs and the mutual fund market that is more flexible and diversified. And when you grow and learn further, you can now expand into individual stock picking when you understand their finances, their operations, and every other thing in between that you need to know before you make such investments. How to get started in this NGX? So you would need to open a central security clearance system, which is mostly through most of the licensed stockbrokers that we have in the country. So Stanbic IBTC and all of those. And most of the minimum investment that you need is around 5,000 to 10,000 to start. But again, the larger the principal amount, the more return you get over time. The fourth investment option, this is one of the most trusted ones, if you ask me. So Treasury bills and government bonds are short-term debt instruments issued out by the government that you invest in within a certain timeline and a fixed rate of return. So that means, let me put it this way, you are borrowing your government or any government of any country your money over a certain period of time, 3 months, 6 months to 1 year, for them to do whatever project that they're working on with a fixed rate of return on your investment over that period of time. And to be very honest, Treasury bills and government bonds are one of the most safest investment instruments out here. If you want to be conservative, this is an option that you should explore. A typical Nigerian government treasury bills or government bonds averages around 18 to 23% per annum, which means that if you're to invest, depending on your capacity, 1 million, 10 million, 100 million, you stand a chance to get a return of over 23%, which is at a very high end with minimal risk. 23%, 20%, 18%. Why is this particularly attractive if you think about it? It's a government investment, so it has relatively zero risk because government would have to definitely pay you back. Yes, including Nigerian government, they'll pay you back. It is also very fixed and it has predictable return, so you know exactly what you stand to gain or your rate of return even before you make the investment. And of course, there's no market volatility, it doesn't go up and down and just very unpredictable. This is very, very predictable. You know what you stand to get. Treasury bills are one of the highest risk-adjusted, returns available in Nigeria, particularly because you're earning strong returns with very minimal risk, like I mentioned. How do you access treasury bills in Nigeria, particularly? Directly through CBN licensed stockbrokers or dealers, right? So you can also go via the mutual funds account. You can also use the federal government savings bonds accessible through the debt management office through their official website. So the fifth option here is dollar-denominated investments. And we're putting this in because as Nigerians, we know how our economy is and we know how it is very, very volatile. It goes up and come down. Advisably, you shouldn't put as much of your money in the early stage in dollar-denominated investment because there are those complications of exchange rate. But it's good to always start small and understand maybe in your 50,000 portfolio, perhaps just 10% of it, which is 5,000, you can invest in your dollar-denominated assets. The dollar-denominated assets are available in the same platform we mentioned: Cowrywise, ARMs, Bamboo, Chaka. They all have that, right? True, they all have that. You can use the US ETFs or index funds to also invest in dollar-denominated assets, and also the Euro bonds, which are government and corporate bonds denominated in dollars. Typically, dollar investing requires the complication and complexity of converting your FX, Naira conversion to dollar, so FX rate applies, and then some of those charges that the platforms have can also affect your investment. In most cases, you need to grow your investment to a minimum of like 500,000 plus to be able to start exploring because of the exchange rate and the minimum requirement to enter some of this investment. This is perhaps the session that made most of us click on this video, and this is what you've been waiting for. So how would I invest my first 50,000 naira? Understanding and knowing all of these investment options that are out there. And this is how I would allocate my 50,000 naira across all of the investment options. The first is money market funds. For money market funds, understanding that it is safe, it has a safety net, it is liquid, and it's a way of learning through the first platform. I'm going to be investing 20,000 naira into this, which is about 40% of my total money that I'm going to be investing in money market mutual fund. The second is government bonds and treasury bills. For treasury bills, I'm going to be investing 15,000 naira, which is like 30% of my money, into treasury bills and government bonds. Particularly because it's government backed, it has high yield and there's no market volatility. It doesn't go up, it doesn't go down, and there's relatively stability and fixed rate of return. You know what you're expecting at the end of the month or at the end of the period that you have invested in. The third that I would put my money into is index fund and ETFs. There I would put 10,000 naira, which is around 20% of my money, and particularly because I want to use it to learn the process. It's diversified market exposure, so I'm going to use it to understand performance over time. The next one would be, of course, dollar market fund. I will be investing my last 5,000 naira of the 50,000, which is around 10% of the total money, right? So why am I doing this? Because like I mentioned, it has its own complications, but it's a way of learning what the foreign market is all about and how the foreign exchange works and all of those charges that applies, and hedging against Naira denomination instability over time. Now, if you notice, if you're to look at the breakdown on this table, I have allocated over 70% into government bonds and treasury bills and mutual funds. Why is this? It's primarily because as a beginner, you should tread safely as you learn the market. That way, you're protecting your capital and having opportunity for growth with minimal risks. 20% has gone to index funds. This is primarily because we want to build long-term wealth, and this is a very good way to start. While you're learning the process, you increase the proportion over time as you keep investing. And you will notice that the last 10% is in dollar assets, which is fair enough because you're also learning how the foreign markets work. So let's talk about the 5 rules every new investor must follow in your investment journey. These rules are very important for you to avoid silly mistakes and mistakes that would cost you a lot sometimes. Rule number 1. Never invest money that you cannot afford to leave for at least 12 months period. If you know you cannot afford to leave it for the next 12-month period, do not invest it. Just keep it in your standard savings account. This helps you in getting focused on money that you would not need and helps you plan long term. It also prevents you from selling at a loss when life happens, because most of the times when you're desperate to sell, that is when you decide to sell just to keep up with emergencies, and you would end up selling your shares or selling your investment at a loss. Rule number 2, never invest more than 10% of your money in a single stock or a single company. When you invest more than 10% or a huge amount of your portfolio into one stock or one company, when that company fails, everything crashes. But if you invest in a diversified portfolio, when one company crashes, your investment still stabilizes. It may drop, but it still stabilizes. That is the power of diversification. Diversification at this level is not even an option. It's a necessity for you to survive investment journey. Rule number 3, invest consistently, not just when the market looks good. By investing a fixed amount of money every month, whether the market is looking good or market prices are going down, it helps you on a longer term to maintain a certain average price, such that when you want to sell, you're at an advantage in most cases. You don't just buy or sell when the prices are up or down. Naira cost averaging, which is the concept of the strategy that really helps in a monthly investment process. And it requires zero knowledge to execute. Just be consistent in automating your monthly contributions to your investment account. Rule number 4, never make any investment decision based on emotions or social hype. You saw something on Instagram or social media that says these are the best assets or stocks to buy in this period because they pay high yield, dividends, and all of that, and you go and buy without making the proper research, without consulting the licensed financial advisor and all of that. You may stand the chance of losing because past results does not guarantee future returns. So all of these things are things that you should know before making any conscious investment decision, and that would help you in a longer term. Rule number 5, review but don't upset. This mostly happens. I also had it like most of the time in my early days of starting my investment journey. I always check my apps, my investment apps, the platforms to see if it has grown or if it's down, if it's bearish, if it's bullish, whatever it is. I always check on a daily basis, on an hourly basis. Sometimes in a day, I can check multiple times to know what is going on in the market. But that is not ideal. You're trying to build long-term wealth here, and the consistent checking wouldn't help you with that. It may force you to make emotional decisions of either withdrawing your money or adding more money. In some cases, may not end well. So try as much to plan yourself and prioritize using a calendar how you're going to be checking your investments. Perhaps monthly, dedicate one day in a month on a weekend. Open your apps, review all your investment portfolios and see which is doing well and which is not, and re-strategize on how you're going to plan for the next. Not weekly, not hourly, not daily. Only on monthly basis. Select a particular date, block it on your calendar, and make sure that you take your time to review your investment portfolio. So there you have it. These are all the rules that you need to know and follow when you start your investment journey, because it is really, really helpful in how long you stay in this trip. We've covered a lot in this video, and I would hope that you've learned a thing or two from this video. If so, please like, share, and subscribe to the channel for more of this. But lastly, before we go, just to do a quick recap on what you need to do, the steps you need to take to ensure that you commence your investment journey today. Choose your first platform, whatever platform you want to use for whatever investment options that we explored today. Download and verify, set up an account with them, and ensure that you make your first investment of your 50,000 Naira in there. Make sure you always go for the money market fund or the government treasury bills and government bonds first. Like I said, it is low risk and you have guaranteed returns over the certain period. Set up a monthly auto transfer from your primary account to your investment account. That way, you completely erase the decision fatigue of deciding whether to invest this month or not. And lastly, put on a monthly review in your calendar where you take a day to review all your investment portfolio and see which is doing well and which is not. All of these steps is something that most people can do within 30 minutes of a day or a whole day, and then literally you've started your investment journey that same day. You can start now. You have no reason to wait. Do not delay your investment journey. What exactly has been stopping you from investing? Share your thoughts and suggestions in the comment section. See you on the next one. Bye guys.